Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some more of the small caps that were in play today. Okay, this is another look at some of the penny stocks. We all know that the Russell 2000 has been super hot. It did cool down today, but you know, the small caps have been on a big run with people have been flocking to the small caps with the tariff news as a flight to safety type of place in the market. And so we have lots of stocks in the sector that are running. A lot are moving, making big moves on very light volume. Okay, so first up, let's look at RXII. This is in the marijuana industry. As you can see here, it closed above 50 on RSI. You know, Fasto's heating up here at 71. And so the big move today was the close above the dotted purple line. That's the middle Bollinger Band. You can see here on multiple occasions, it tried to break above that line after closing below, and that signaled the continuation of this downtrend. Finally today, there's a close above that level. That signals the possible start of a new uptrend. Notice the green dots did flip below the candles, so you have a PSAR bull flip. Parabolic SAR. SAR stands for stop and reverse. So this could be a signal that a new uptrend is starting. It has to hold the middle Bollinger Band currently at 310. If it can hold 310, the next target is the 50-day simple moving average at 392. It has to bust through the upper Bollinger Band at 362 and then close above that 50-day simple moving average. Once it turns that level into support, that's when it could really get moving, and we'd be talking about running up to the 5s and testing these moving averages above. Notice the nice volume down here. The marijuana sector has been moving and heating up. The Canopy Growth, Aurora, a whole bunch of stocks in the sector have been trying to start new uptrends, and so we're finding that the stocks that have been lagging behind are following suit, and this is the first step, is breaking that middle Bollinger Band and turning it into support. Okay, let's look at ENRJ. This is a small cap energy play, and so keep an eye on this one. What we're looking for is just like the RXII chart, you know, how it had been below the dotted purple line and then it finally closed above today. Well, it looked like ENRJ was going to finally close above the purple line today, the dotted purple line. Last close above was on this candle right here on right here at the start of January, but it was above that level intraday, but you could see the long upper wick. They ended up driving it down into the close. So going forward, it's in play if it's above 16. That's the middle Bollinger Band level. If it's below 16, that makes it a risk to hold. It's going to be a risk to hold overnight for a long position. It's a great position if you're short because it's heading lower, lower, lower. But if you're trying to play long, you have to wait for that break above the middle Bollinger Band, and then that level has to hold. Once that middle Bollinger Band turns into support, we'll be shooting for that 50-day simple moving average at 18.9. Okay, take a look at ATRS. Okay, so this has been on a really epic run. So congrats to everybody that's been trading this. As you can see up here, you have RSI now at 71, so it's hitting overbought levels, and you have Fasto at 96, so it's getting pretty frothy here. It's on like I said, it's on a 5-day run, and then today the bullish development was the close above the red and the blue lines. That's the 200 and 300-day simple moving averages. They both converged at $2.56, so that is the key level to hold. Notice there's been this uptrending channel, and so it's currently hitting the top of the channel. That's at 280. Notice the ascending resistance line, so it's gonna have to bust through that level. That could signal a temporary top. You can see where when it's hit that level, it's pulled back in the past. So if it can bust through, turn that into support. If you look over here to the left, in October, there's a gap between low of day on this candle and high of day on this candle. So yesterday, it closed above the bottom of the gap level for the first time since it's dropped below, and so what you want to see now is that bottom of the gap level turning to support. Basically, it needs to stay above that 100-day simple moving averages, and then what it turns into is a gap fill play. If it can break out above that 280, what we look for is a retrace up to 370 to fill the gap. Now if it pulls back into the Bollinger Bands, that's going to be the signal that it's cooling down. If it drops below 250, that's going to be the red flag, and then it could possibly pull back to test that middle Bollinger Band. Okay, let's look at GLBS. So yeah, keep an eye on this one. This is one of the marine transportation stocks. It's super thinly traded. Only had 660,000 shares traded today, but it is trying to heat up, so just keep an eye on it. It's at 60 on RSI. Every once in a while they run these things. Notice today it closed above okay, so it started the day down here. Okay, so or yesterday it closed below the middle Bollinger Band, and it hadn't been above the middle Bollinger Band since back here in January. And today there was a gap up open, and then it actually closed above the 50, 100, and 200-day simple moving averages, and it closed at high of day. If it can stay above 113, that's going to signal it's still in play. So keep an eye on it. If it can stay above all those levels, that would signal, you know, that it possibly wants to break out and run higher. Notice that it hasn't been above all these moving averages since this candle back here. You know, the last time that it broke above, you know, the middle Bollinger Band, that was the same time that it got back above that 200-day simple moving average. So going forward, above 114 puts GLBS in play. If it drops below, it will be a risk to hold. You know, it has really light volume, so it looks like it's setting up. They might try to push this thing with some volume, so keep an eye on it. Let's look at EARS. All right, so this is another one that's heating up down here. You know, this is one I recommend keeping an eye on. It has this long downtrend. You know, it started pulling back after it failed to get above the middle Bollinger Band, and then you can see here last week it had closed above the middle Bollinger Band for the first time since, you know, I guess way back here, and yeah, it tried to hold that level, but it pulled back, and then now today it closed right back at that level. So going forward for EARS, if it trades above 28 cents, it's in play for a long trade. Look for a run possibly up to that upper Bollinger Band. If it can break that, you're looking at a run up to the 50-day simple moving average in the bottom of the gap. There's a gap between low of day on this candle and high of day on this candle. Notice the bottom of the gap is lined up with the 50-day simple moving average. So, you know, that turns into a target if it can break out above these key resistance levels. Basically, going forward, 28 signals go long. If it's below 28, it signals it's a risk to hold. What makes this interesting is this volume spike. It looks like they loaded down here. You know, when you get loading before the run, many times volume will precede price, so we'll see if it can follow through. Okay, let's look at AAC. This stock's been on a really big run on light volume. You can see it was up, you know, up 10% today. Only 600,000 shares traded, but it's been pushing really hard. You know, it started down here in the end of February. You know, below the 200 and 300-day simple moving averages. It got above, and then it's just been riding EMA4 support higher. That's at 11. That's the key level to hold. If you see a close below EMA4, since it's been holding during this entire run, that will be your signal, okay, it's finally cooling down. Today there was a bullish break above the November high close, so that was a huge move, and then now it's testing the ultimate price to break currently, which is back here in September. This September high close in that 250 resistance zone. If it can get a close above that level, that'll signal it wants to break out higher. You know, 13 is the recent big high here on this chart. So basically, if it fails to break this 1250 level, you know, that will signal a temporary top. So you need to be on the lookout for it, since you know, it's been on this big run and you have a big volume spike today. So this could have been the climax spike today. You know, if it fails to get above that 1250 to 13 level, that's going to signal downside risk, or at least just that the run is cooling down and it could consolidate, which means that there's potentially reload levels lower. Okay, let's look at JRJR. This is another one to keep an eye on. It closed up 7%. So today the bullish development was that close above the middle Bollinger Band. You know, this is happening all across these small caps in the healthcare sector. Okay, so check it out. It's healthcare. You know, this is the sector has been really hot. When a sector is really hot like this and they're running everything, they're just going down the line and they're running each one. And so you the game is to try to find the next ones that they're getting ready to run. And so, you know, you do that with any kind of sector-wide rally. And so right now, JRJR this would be considered day one if it does follow through, because it was in a downtrend, right? And so the downtrend started, you know, when it broke below the middle Bollinger Band here, and it failed to get above that level until today. Today was the first close above the middle Bollinger Band. So if you can load here and the middle Bollinger Band holds, you have the low entry point for a potential run higher. And so that's why we always look for a close above the middle Bollinger Band in the daily chart as an entry point, and then you use the middle Bollinger Band as your stop loss level. You know, if it looks like it's going to close below 13.3, then it would make it a risk to hold. If it holds that level, then the target's going to be up here at that 50-day simple moving average at 16.9. Notice the nice volume spike behind the move today. Okay, let's look at DSS. This is super thinly traded. Only 180,000 shares traded today. But you know, once again, the reason why I'm showing it to you is because of the close above the middle Bollinger Band. I know I sound like a broken record, but what we go for are the patterns, and we look for the same patterns that lead to success, and the only thing that changes are the ticker symbols. symbols. Okay, so the patterns never change. And why do I like that close above the middle Bollinger Band? Well, let's look at the historically what happened to DSS the last time it was trading below the middle Bollinger Band and then it closed above. Okay, let's look over here on the left side of the chart. You can see here it was above the middle Bollinger Band here in October on these two candles. Look how it was trading below the entire time. Look at this candle right here. It finally closed above. Look what followed, a super long uptrend. I'm not saying necessarily that a very long uptrend is going to follow here, but what I'm saying is that it closed above the middle Bollinger Band today, and that is the first close above that level since back here in January. And so that is a bullish change in trend, and that's what we look for, is for the day that the trend changes, and that's where you get the low entry point if it follows through. Now they have to follow through. They don't always follow through, and that's where you know that's what separates the rookies from the pros, is being able to manage a bad trade. You know, being able to manage when you're wrong. Let's say it dropped below 112. You know, what are you going to do? Are you going to hold? Are you going to ride it out? You know, that type of thing. Being able to make the right decision on how to manage it if it doesn't follow through. Okay, and so basically for this play, it's all about that 200 and 300 day simple moving averages. You can see the red and blue lines here have been holding the entire time. If it drops below those levels, that's your signal it's broken. As long as those levels are holding, and especially if it's above that middle Bollinger Band at 112, that signal is more upside. Now the next big level is going to be this 100-day simple moving average at 129, so that'll be the next target to break. You know, that's 10% to the upside. If it does bust through that, you could see a run back up to that 50-day simple moving average. Once again, watch the volume. You know, it's such low volume that it's set up to have a volume spike. So what you want to see is that breakthrough above resistance and then a volume spike accompanying it, and that's what really gives you the clue that it's ready to go. You can see over here that before it had really low volume, and then you've got the volume spike, you know, with that move above, it picked up, right? It was light volume on the first day above, and then volume picked up the next day, right? And so, yeah, that's just another clue that it's ready to follow through. So keep an eye on the volume. Also look at the dots. The dots were above the candles the entire time that it was in the downtrend, and today they finally flipped below, okay? And so that's the first time that they've been above the candles since back here. And notice when stocks are heading higher, the dots are below the candles. You know, it's heading higher and they're below the candles, and then it's dropping lower and they're above the candles. That's parabolic SAR, stop and reverse. Okay, let's look at RKDA. Okay, this is really thinly traded. All right, I probably shouldn't even be showing you this, but I am, because there's something interesting on the chart. Only 79,000 shares traded today, but check out the volume spike here. Look at this volume spike on the 27th of February. Okay, and then look at this wick right here. So it looks like they pulled it down to load here. And they look, that's a lot of volume, and so for this really thinly traded stock, and so it looks like since they've been pushing higher ever since, you know, they loaded up here, and yeah, now it's at the crucial level. Okay, so it's right at the high close from January. It's at the top of this channel. You know, notice that was support from back here, and so if it can break above this level, then it could run back up to that 200-day simple moving average. Notice how that was the top of the previous run. So basically, you know, if it can break above 650, you're looking at a dollar to the upside to 750, and that 200-day simple moving average, that will be a tough level to break. You can see that it was resistance back here in October, so keep an eye on RKDA. Another one to check out is AKER. I've been showing you all these stocks that are heading higher and made bullish moves today, but this is something a little different. You can see it closed down 8% today, and so this is a bounce play. And so I'm going to show you a strategy that we like to use for stocks that are trading in an uptrend. And so you can see here this started an uptrend when it broke above the middle Bollinger Band here. There was a close above on the 16th, and notice the candles have been heading higher ever since. And so today the candles have hit that middle Bollinger Band after working back on a multi-day pullback. You can see that they've pulled back for 5 days in a row, and so we look to reload off of that middle Bollinger Band if support holds. It's the bottom of the channel. It's the bottom of the bullish upper Bollinger Band channel. The middle Bollinger Band is the bottom of the channel, and the upper Bollinger Band is the top of the channel. So if you can load off the bottom of the channel and it bounces, you get the low re-entry point. Now the downside risk is if this middle Bollinger Band fails to hold, it will be a risk to hold, and it could drop down to that 100-day simple moving average. That's the fine line about getting the low entry point and then having it not follow through and hold support and break down lower, and that's where you have to exit quickly. So that's where, you know, you have to, that's where the skill comes into play. And yeah, so basically if it can bounce here off of 55, this could be a nice re-entry point for a rally back up to that 200-day simple moving average at 80. And then let's look finally at RNVA. This used to trade on the big boards, and then it got, and then it was delisted to over the counter, so it's an OTC stock now. Look at the volume here, 145 million shares traded. They drove this thing into the ground, and then yeah, and notice it's a semiconductor. So this is been a hot sector, and you can see it kept failing to get above the middle Bollinger Band, and then finally on Monday it closed above. That was our clue. It was ready to go. They shook a lot of people out on this candle on Tuesday. Notice they used that pullback to load. They pulled it back. They probably loaded off of that middle Bollinger Band zone here. And then on Wednesday it took off moving again. That closed back above the middle Bollinger Band, signaled more upside potential. We did put out alerts and charts on this one, and the 50-day simple moving average was the next target. It's hitting that level now. So if it can break above that 0.19, if you see it trading at 2 cents and higher, that's going to be your signal. Okay, it's ready to keep moving forward. Okay, you want to see it close above that level tomorrow. Now, if it hits that level and stalls out, it could pull back and test the EMA4 at 0.012. As long as EMA4 is holding, the chart's super strong. It's just at a flex point now. It's either going to break through resistance or drop through support. If it breaks through support, then it could retrace back down to test that middle Bollinger Band again. The best thing for the bulls is that it busts through 2 cents and closes above. So keep an eye on it. It could really get moving. Look at the big volume. There's huge volume behind this play. Okay, thank you very much for viewing this video. Please come check out our chat. Yeah, everybody's welcome to check it out. I give out, you can check out a free 24-hour trial. We're all in the premium chat, and I'm posting lots of charts, technical analysis, educational information all through the day, pretty much around the clock, 24 hours a day. There's information getting posted. And so, yeah, if you'd like to learn more about how to trade using charts and technical analysis, please come join. Thank you.